If you can't beat the market, why not just invest all in SPY or VU? I'm an intermediate investor, but I can't stop thinking about why strategically invest in 20 different stocks, ETFs, funds, when it's so difficult to beat the market, especially over the long term. It's near impossible. Why not go 100 into SPY, VU, DIA, or other index funds? Over the long run, you should beat 90 of active investors, I would think. You answered your own. You're right. Welcome to our boggleheads. You're preaching to the choir here. I went to a top 10 business school, and that was basically the advice from our finance professor, lol. And I agree with it. Unless you are willing to spend huge amounts of time researching and finding out leading information and incorporating it into your trades very quickly, also known as a full-time job, you're better off buying an index fund with low to no fees. The average person is best off just investing in index funds. Why not go 100 into SPY, VU, DIA, or other index funds? A lot of us do. But not DIA. It's a terrible index. Because it's not like a heroin hit straight into the vein, like making a 500 return on an IPO for vaporware and then losing it all on an investment in Big Willie's dildos and vibrators emporium. No one says you can't beat the market. It is improbable that you will beat the market on average long term. But improbable does not mean never. Sometimes the goal isn't to beat the market. A lot of people want safer portfolios than what only VU has to offer. I'm about 70 in VU and 30 in companies I like. I am slightly beating the market, but it's not really about that. I find investing fun, and so long as I stay 70 in VU, I don't mind trying to beat the market with the other 30. Maybe I beat it, maybe I fall short, but that risk of slightly falling behind VU is fine for the joy I get out of it. I spent several years choosing individual stocks, and over that short period, about 6-7 years, I certainly beat the market by about 1.5 points. Not worth all the time and energy that went into it at all. I would have been better off working a minimum wage job than spending all that time researching. Not to mention there was certainly a large amount of luck on my side. If I carried that out long term, I doubt I'd continue to be successful. It is boring as fuck. Just buying the SPX was a good idea when it wasn't gospel consensus everywhere. Ask the shoeshine boy and he'll tell you to DCA into a low-cost index fund. The next 10 years may not be pretty for this strategy. Bogle, by the way, said indexing would stop working if everyone did it. He said chaos and catastrophe would result. This is literally the 1000th thread about the same thing. I honestly wonder if ETF providers are posting these. Face with rolling eyes. Why does this subreddit rarely mention ITOT? For people who can't buy fractional shares, ITOT is more efficient with drips than VTI. Welcome to our boggleheads. That is pretty much the strategy espouses by the late Jack Bogle. Don't try to beat the market. Own the market. Usually a total market fund, not an SP 500 fund, is advocated, i.e. VTI. ITOT, VT-SAX, FZROX. Sometimes this is expanded into the concept of a 3-fund portfolio with varying amounts of U.S. total market, international total market, and bonds. That is certainly a solid strategy. Personally, I like to have a little more exposure to small and mid-caps. I have 10 in each of VBVO. Gotta have some fun trying to pick winners, but index for the core. That's what's keeping the markets afloat at this point. Everyone is pouring into ETFs. Yes, you should just buy the market, the entire market, not just US large cap. I've been underwater on VU for over a year now. You can absolutely beat the market by picking stocks. I don't recommend trying it yourself unless you're willing to spend hours a week on research. But it's entirely possible. Many buy and hold stock pickers outperform. If you can't beat the market, you can beat the market. Especially over the long term, it's near impossible. It's very possible. Over the long run, you should beat 90 of active investors, I would think. You just said nearly impossible. And now you're saying 10 of them beat the market. Also, I genuinely have no clue what active investor means. A chunk of my paycheck gets invested into indexes every couple weeks. Does that make me active? Or is it only purchases of individual stocks? If my last stock purchase was in March, does that make me not active? SPY lost 18.5 in 2022. Last 3 months RTN 2.94. Last 1 month was 1.66. Unless someone who is not knowledgeable. DIA is way less volatile and can be unloaded WA reasonable RTN. With SP it is meant to be a long time put away, e.g. 20 years, to enjoy a reasonable AVG return. You can beat the market. Look at AAPL versus VTI over the last 1, 2, 5, 10 years and it's outperforming. Problem is you have to pick the next Apple and most people will get that wrong. So you can risk your money for bigger gains, but you may also end up picking a loser that files for. Chapter 11. So, rewards come with risk. You need to decide if that risk is worth it. For most, it isn't. SPY is up 13.7 YTD. However, it's down 4.9 in the last 3 months and was down 18.17 in 2022. So, if you invested in SPY on January 1, 2022, you would be down 4.47 right now. If you bought Tesla this January 1, you would be up 196. Goog 58. MSFT 39. AAPL 37. Can we just nix this sub and replace it with a wiki that says buy the Fortune 500 index funds? The only thing I've learned here is that index ETF are anyone's hope. We don't need a sub for this. Some people can end up lucky. I have 95 of my portfolio in MSFT at 40 gains. Would be foolish to cut that for this index stuff. Investing in index funds is exactly what you're supposed to do, lol. Literal pros lose out to index funds more than 50 of the time. Or just use a robo-investor. Fidelity Go or Betterment or something. Doing individual stocks yourself is an awesome way to be 100 at fault for losing a bunch of money. You're not that smart. Put your time and effort into shit that it's actually possible to be good at. Even successful professional traders who work in the field invest in index funds as well. If you're 100 in SPY and you're about to retire and the market crashes, you're either going to have to work more years and get through the crash, or live off less in the down years. Generally speaking, bonds perform well during market downturns, so you can sell those off in retirement while you hold your stocks. Also, holding rights and international stocks gives you more diversification. Holding all those usually means you have less downside during a market crash. VU over SPY if you're just gonna set it and forget it. Lower expense ratio. SPY and similar funds make up more of my portfolio as time goes on. My son is 100 in SP 500 index funds and has convinced me to do that too.